The sentiment in the global financial markets now depends entirely on a speculation about the further rate hike by the Federal Reserve. Every macroeconomic report with the green readings increases the likelihood of a sharp rate hike by 50 basis points, and such prospects reinforce the value of the US dollar. What other events could influence the greenback at the two sessions of the trading week? Let's figure it out in our regular calendar on InstaForex TV channel. On Thursday, March 2, market participants will be riveted to the preliminary CPI for the Eurozone, which will give a clue to the inflation dynamic. The Consumer Price Index is expected to slow down to 8.2% in February on a year from an 8.6% increase a month ago. Nevertheless, the annual inflation rate is still way above the 2% target, which the ECB defines as the most reasonable for decent economic development and growth. Obviously, the ECB will go ahead with more rate hikes, making efforts to bring down high inflation. The ECB's hawkish agenda should support the single European currency. Market participants are looking forward to the minutes of the ECB's last policy meeting to find out the agenda for further monetary tightening. The minutes are likely to remind investors that the ECB is planning to raise the key interest rate above 3.5% until the year end. The policymakers hardly discussed the likelihood of lower interest rates. The market does not rule out the scenario of another rate hike by 50 basis points at the next ECB policy meeting. Such prospects are bullish for the euro. In the early New York session on March 2, market participants will check the weekly update from the United States Labor Department for initial unemployment claims filed on the week ended February 25. Analysts again project an increase below 200,000. It signals the overheated labor market and sets the stage for inflation acceleration. Under such conditions, the Federal Reserve will find an excuse for more aggressive policy moves. Markets are puzzled about the US economic calendar in March, and traders do not find highly anticipated non-farm payrolls for the previous months, which are commonly due on their first Friday. Something is going wrong. The US Labor Department has not made any comments on shifting the release data. Meanwhile, market participants will have to observe the weekly unemployment claims and make their reasoning. On a Friday, China will please investors with its economic data. Recently, analysts have discovered the green shoots of recovery in China's economy. And on Wednesday, traders regained their risk appetite in light of the upbeat manufacturing PMI by Taishin. The same response will follow after the services PMI by Market Economics. The Australian dollar, which is viewed as a barometer of the risk-on mood in the Asia-Pacific region, will certainly gain ground following the report. During the European session, experts at Market Economics will provide revised PMIs of the services sector and composite PMIs, which indicate the direction of a GDP for European countries and the United States. To complement the picture of trends in the US non-manufacturing sector, investors will find out a batch of data from the Institute for Supply Management. According to forecast, the US services sector is losing momentum. The non-manufacturing PMI is expected to slip to 54.4 in February from a 55.2 in January, and the stock market will decline in response. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in the market sentiment with us. Any comments, questions and offers are welcomed, and we wish you profitable trading with the InstaForex, and see you soon.